everybody. Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston with the Briar Hill Group at Remax Camosun, and I'm here with...
Hey everybody,
Andrew.
I'm LePage with LePage and the Live Collective.
And
Jen Lowe, mortgage broker with Dominion Lending Center's Modern Mortgage Group. Good to see you guys.
Good to see you. And our chair for today is Jen. Jen, what are we going to be talking about?
Yes, we are going to be talking about the most recent Bank of Canada rate decision and what this means for mortgage holders, whether you've got a fixed rate or a variable rate, and what the effect is.
Okay, do you want to do the stats first, or shall we go into your topic?
Why don't we dive right into the topic? Because normally I do an update first anyways, and then we can talk about the stats. Sounds good?
Okay.
Awesome. Okay, well, to update everybody, if they didn't already know, that the Bank of Canada cut its overnight lending rate by 25 basis points, which is the first move down in a while. And it's got everyone asking, well, what does this mean for buyers, sellers, and investors? It also brings us back to the big question of whether we go fixed or variable.
Right.
And are more people choosing variable now? Well,
right now, like if you look at about a $500,000 mortgage with a 25-year amortization, right now, a fixed rate, you've got a monthly payment of about $2,707, and a variable rate is just slightly lower, and your payment is $13 cheaper.
Oh,
for 100,000, right?
For 500,000, yeah.
Oh,
so,
okay.
Yeah, the kicker is that most analysis think that the Bank of Canada is going to potentially cut 2 more times by the end of the year. So if that happens, variable rates are going to go down from 4.2 down to 3.7 potentially. And that's going to drop your payment, assuming that 500,000 mortgage, $142 less than had you chosen a fixed rate a month. Yeah.
Yes. What would you do, Jen?
Yeah, I am a bit of a risk taker. So in breaking down the, risk of a variable, so you've got to be okay with the, and know that a variable rate is going to go up and down. It's great when it's going down, and the current outlook is that it's going to go down, but you have to be okay that at some point during the term, rates are going to go up.
And that's, and that is what we went on a variable and rates went up, and we got caught with that. And a lot of people did. And that is one of the risks. It's an uncommon risk, I think. I mean, generally speaking, you guys can see the writing on the walls and
yes,
it's less of a risk. But when they're really low, it's easier for them to go up.
Right. Yeah. Yes, and that's it. They were so low for a long, quite a while there due to unprecedented times. And then we had other interesting challenges in our economy that raised rates.
So I have a question. Oh, sorry. What is the average amount of money that people are mortgaging?
I put in 500,000. That's about the average, in my opinion, right? People that are
the value of what they're buying. This is the actual money they're getting lent to buy something, and they're maybe putting in their own money to get there. Okay.
Mortgage size, not the purchase price. This is the average mortgage size. Yeah.
That's interesting because I mean, a lot of buyers that I work with are, I mean, some are cash buyers and some only need a couple $100,000 for mortgage. But I working with, for example, first-time buyers, they're all going to be mortgaging on average much more than 500,000, unless they're buying an entry-level condo. So what that speaks to is there's a lot of people out there with money to be able to
Well, it
buy
could,
homes and only have a $500,000 mortgage.
represents also who Jen represents.
Yeah. And I'm doing an average of like, I mean, if you're purchasing a condo for 600,000, right? You're mortgaging for 500, versus when you're purchasing a single family home, 100%. Lots of those mortgages are in the $800,000 range for sure.
Got it.
Yes.
So, what's the advantage of what are the rates for like 3 and 5 and 10 year for fixed rates?
Fixed rates right now, so that 3-year fixed rate, we're seeing come down. So that right now is like 4.09 to 3.99%.
Yep. And what's a 5?
5 is about 4.29.
Not that much difference.
Can you get a 10 year?
You can, but those rates are way higher.
Okay.
Like
and so
6, 7. What's a 5?
Yeah, I honestly, I don't even know what the current 10-year rate is. I've done one 10-year mortgage. Jane knows who we're talking about. And she
got 3.3 or something.
Oh, she got a crazy low rate. It was perfect timing. She nailed it. Whereas normally,
Smart.
securing that 10-year rate.
Yeah.
10 years is a long time, and the penalties to get out of a 10-year mortgage are significantly higher in the first 5 years. So,
right. Okay. Because that's something I guess people don't actually think about is the actual
to get out of it. Yeah.
What's the variable? Sorry, right now on what's the variable rate right now? Prime minus.
About prime minus a half. 0.5. So my calculations that I did, I based it at 4.2%.
I think the challenge with people always has been with that question between variable and fixed is, fixed is always that little bit more than variable, and it's enough more generally that you're thinking, well, variable would have to come up a fair bit on average for it to, be worse than going fixed. And so people do go to fixed, I guess, for that comfort, but there's just that, if you it's hard. And your friend there, your client there, Jane and Jen, that did the 10-year, that was really risky in some ways, but they obviously were well educated, done the math, and were willing to take that risk. And at that point, they know 10 years at 3.5% is like, that's on average really low for industry.
Yes.
They're like highly research based. So that would, they were tending in that direction. So
yeah. I mean, the focus with fixed is boring, but it's stable. There's never any surprises, even if the economy kind of takes a weird turn. So that's the benefit of fixed. It's kind of like with investing too, right? I mean, are you wanting to take high risk to get a potential higher reward, or would you prefer to just kind of go even flow and not take that risk? So
now what are the options? What are the options to someone who does, let's say they go variable, and then there's the two kinds, right, where you can have the consistent payment or the variable payment, right?
But, yes.
Oh, right.
If you get into a variable mortgage, and then the market or the interest rates do become something that's just untenable, like you can't pay it. I understand that people were doing this. You can go to the bank and you can maybe negotiate or get into something that might switch things up a bit. But there's also a trigger point where, let's say you were on a fixed payment plan and the variable rates go up so much that suddenly you're banged with additional payments that you hadn't anticipated. So can you talk a little bit to that? Because I think there's a lot of people who don't know their options around those things and some of the nuances.
What's it called? Is it called the trigger point or something?
Trigger point. Yes. So that was a term that I find it very comical. So I've been in the financial industry since I was 18 as a teller in the bank. never ever heard trigger rate, trigger point, that term until we had that crazy increase in rates after COVID, which then cause people to basically, with the point of the trigger rate is that your mortgage payment that you're making, because you're on a fixed payment for a variable rate, you're not even paying enough for the interest. So you're paying interest on interest and your mortgage is going in the wrong direction.
Mortgage is going up.
Yes.
And therefore your amortization is going up.
Yes.
Meaning the amount of time it'll take to pay off your mortgage.
That's right.
Yeah.
So it's definitely a really important discussion when people are exploring variable rate options, working with a mortgage broker. We can look at different lenders. What's your preference? Do you want to pay your mortgage off sooner and just have that fixed payment? We'll go to a lender that has that fixed payment option where you can benefit as rates go down. Or do you want to have your payment fluctuate? When interest rates change, your payment will change. So it keeps you on the same lifespan for your mortgage. Call it 25 years. That won't change. And your payment changes, which is...
I have a question.
Oh, yeah, go ahead.
I have a question. So when you're negotiating your mortgage, you are paying primarily principal at the beginning of your mortgage, and then as it continues, you're paying primarily interest, and then as it continues, you're paying more principal. So let's say you get a mortgage and you have a 5-year mortgage, and you're paying, you have $500,000. How much of that is going to the principal and how much is going to the to the interest, sorry. And then compared to the end. And then when you go back and you're refinancing, I'm assuming you've paid off maybe a quarter of that. So you're at $400,000. At that point, you go back to paying, like, you've now gone back to zero and you're paying more interest again, right?
Yes and no. So, I mean, if you refinance, so after your mortgage is up for renewal and you want to refinance, you then are kind of starting over again, where you're paying more towards interest in the beginning.
Right.
But if we're setting your amortization, like if you want to have you're coming towards retirement and you want to have your mortgage paid off in 10 years, we can look at different options to say, okay, well, if you increase your payment by $50 a month, if you pay by accelerated biweekly, and you make a lump sum of X amount of dollars, we're going to get your mortgage paid off in 10 years. Because the key is it's compounding interest semi-annually. So any of those lump sum payments you're making are applied to the principal, which then reduces so much quicker.
Reduces things. Yeah, you can get ahead of it a lot by paying off sooner. You save, short-term pain for long-term gain. Is and doing those early payments really help the long-term transition. I just want to say one thing, Jane, really quickly. Hey folks, if you're watching this from YouTube, if you're watching this from Facebook, you can put a comment into the chat there, and it will come up on our platform here, and we will be able to respond to you. So if you have any questions for Jen or
please
for
ask
any of
questions.
us, please do type it in, and we'll do our best to respond to you.
Yeah. And what
I
are
can't
you
remember
guys
my
seeing?
question.
Oh, shoot.
Oh no, okay. I do remember now. So I'm just wondering about personality style and the type of loans that people take. Like, I'm assuming very conservative people tend to like the fixed rate and knowing what they're going to be paying for the next 5 years. I have had clients like that recently, and I'm like, are you doing accelerated biweekly? And they weren't familiar with what that was. And I'm just like, okay, this is to me a no-brainer. So just one extra payment a year, because you're paying that extra whatever, reduces your mortgage. I think it's by 4 or 5 years, right?
Significantly. Yeah.
So do you talk to everybody about that?
Most definitely. Yes. Yeah. Here's your different payment options. That's definitely a good reminder what you've just said there. Like, uh, what the benefit is of paying accelerated biweekly for sure, or even accelerated weekly. And it's also in asking, how do you get paid? If people are getting paid semi-monthly, it's paying accelerated biweekly could be a challenge for them, versus if client is getting paid every 2 weeks. Well, why not have your mortgage come out every 2 weeks and you're making an extra mortgage payment a year? So
Yeah.
huge benefit.
Okay,
so have you guys noticed an increase in the with buyers and sellers with the rate drop last week?
Not
significant.
not
Not yet.
significantly. Well, you know what? I have more sellers wanting to list now,
Yeah.
which is interesting. So we're
Okay.
loading up on listings right now. Our I have noticed on some properties, if it's priced well, there is definitely a faster movement happening than in August, for sure.
Yeah.
But
Good to hear.
there's still, the property has to price well if you want it to sell.
It's true. It's always true. It's always been true. And no, it's so much more true today. Anecdotally, talking to some colleagues at one of our recent networking group meetings, there was a lot of talk about the fact that people are not holding their feet to the fire anymore with offers. They're bouncing and collapsing offers much more quickly.
Yes.
Based on small things like a building inspection, needs a new hot water tank, or something that would, in the past, we would consider a relatively small thing that would be maybe negotiable, or not in this big scale of a $1 million home purchase, not really worth collapsing over. But I think right now, because there's a good selection of property and buyers are not seeing a big appreciation in pricing right now, they're feeling like they can afford to wait. And if they don't get what they want, everything they want right now, they'll continue looking. So there's just not the urgency that there was.
I feel we're at the bottom of the market, quite honestly. And I feel like there's a lot of grumpy people out there, sellers because they're not getting what they want, and buyers because they want everything and they're not getting it. So
Yeah.
I feel like people just need to take a little chill pill and have some grace. They're angry. They're angry.
Yeah. Interesting.
So,
and you're not wrong that we could be near the bottom, given the fact, as Jen said, Bank of Canada is looking at a couple more price interest rate drops. And at some point, when the buyers do come back and the inventory starts to get taken up again, and we never know when that exactly is going to happen, but there is a critical point where enough people say yes, based on the economic conditions and the messaging from that's out there, that we start to see the sales happening again. And then those buyers that have been on the fence and waiting for that deal and had so many wonderful opportunities just in a banquet in front of them, ready for them. You could have taken this one or this one or this one or this one. They all evaporate, disappear. You no longer have a choice because everyone's already snapped those up and prices have gone up. So it's a really funny thing, because right now is a good opportunity, but people don't.
It happens fast. The change happens fast. Yeah.
The switch. Yeah. And the other thing is those people who are waiting are very analytical and they're overanalyzing. And rather than go for a nice property that will suit their needs, they are like, I'm waiting for the bottom of the market.
Yeah.
And then
if someone was truly good at analyzing, they would analyze the fact that the people who analyze probably don't get as much benefit as those who, I've seen it over and over again. The risk takers are the ones that generally, yes, every once in a while a risk taker loses, but the risk takers, and I'm not advocating for risk, I want to insulate people as much as possible, but I've seen over my career so many people who go like, yeah, this is a good time, I can see the writing on the wall, I'm jumping in now. And they're the ones that make the money. They're the ones that get the property value appreciation. They're the ones that get the choice.
You know,
Yeah.
I would say that's a change in you from when you first started in real estate, because I think you were very analytical and conservative when you started. But I mean, obviously, you've seen a lot happen, and I see you being still analytical and conservative, but I see you more of an action taker now, like based on
Mhm.
your experience. That, you know, when you work with people, there's nothing worse than seeing a train wreck happening in slow motion.
In slow
And you're
motion,
like,
and
Mhm.
knowing that
just right the
Yeah. Yeah.
and it's definitely hard to have people that are highly analytical to really hear and understand that, and they don't want pressure. They don't want to feel pressured. And I've never wanted to be the salesperson who's like, "You've got to do this. This is, I don't want to, push somebody into something." At the same time, they need to hear this sometimes. They really do.
So, okay, here's the story. We're looking at properties, and this is recently, and this property comes on the market that's well priced. And I go in and I'm like, in my head, I'm going, there's like 5 different types of flooring in this property. But basically, that's really the only issue with it. And we're told that an offer's come in. We go to view the property, and I say to the buyers, the agent is waiting for us to view, and we're going to be able to submit an offer. Let me know if you're interested. Okay, so we submit the offer, and we give them a short timeline because we want to get it resolved. And I'm not sure if I'm fading out or not. My internet's a little.
No, you're good.
Okay. Anyway, so we submit the offer, and the agent plays us against the other one. And they obviously, like, we came in at asking, and obviously the other offer came back and it was higher and they won. And so then we go to we then talk about the process. And then what I say is, listen, here's what happened is they probably came in just under asking. The agent felt there was an opportunity to push them up, and we ended up pushing it up for them. So this is what happens in multiple offers. So if you wait, or if you see a property, just remember, like, when properties are listed, there's a little amount of price elasticity at the very beginning, and it expands over time. When somebody lists their house and it's like within a week, they want the asking price or very close to it. And I have a feeling the first buyers didn't do that. And anyway, so I don't know what the sale price is, but then I we broke it down, and I said to the buyers, this is a lesson here, is that if it's a few days on the market, that if you don't come in close to asking, that the agent's going to really try and garner other offers.
Right.
So it's
yeah.
It sometimes can work against you to try to negotiate too hard when it's first on market. And I don't know about you, Jane. I'm Jen, probably not you, but Jane. We've many times listed properties, and it's early on market, and we get an offer above asking price, and it's not even competing because it's $1,000 above asking price, or it's $100 above asking price. But essentially, the buyer is positioning the offer to say, look, we're giving you everything you're asking for. Please just say yes to this right now, so we don't end up competing. We don't want you to have to deliberate too long, because there's always the risk of an intervening offer. And so they are bringing an offer that they feel is acceptable now. Because the problem is, let's say you had brought in an offer 10,000 under asking. The seller says, you know what, that's acceptable to me, but let's sleep on it. And then the next day there's another offer. And then then the original people offering either need to bid much higher than they already did in order to get it, or lose out.
This is a big difference from when we started in real estate. This is a huge shift in the mentality, because when we first started, what one of the kind of big agents in our office at Pemberton Homes said was, don't offer their asking, because they'll feel they didn't price it high enough. So don't come in at the seller's ask. Always come in a little lower so that they feel good about negotiating back up to the asking
And I do
price.
agree with that as well. That's another side to the argument. And sometimes there's no, it's really hard to know in advance what the right strategy is. But if the property truly is well priced, don't quibble it. Because,
And if the
if
property's
you do go to
priced,
multiple offers, you're going to be seen negatively against the others.
yeah. And if the property's priced well and you write the offer, and just understand the seller knows you're looking at the list price you're looking at the house based on the list price. You're there day one on the market. The seller's going to be highly motivated. And then finally, I'm really distracted by what Andrew's just put on the screen. What is this?
This is another thing around offers. It's just something in one of my presentations. But so many people also the buyers want to take the night to think about it, and then they end up also in a position of having to compete.
Yeah,
just make the move.
So there's a slide up, and it's not Neo, Orpheus. No, from the Matrix. I'm forgetting his name. But
it's okay.
What if I told you that home you saw today and want to think about tonight will sell today to the people who saw it yesterday and thought about it last night? And
dun, 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 dun.
Jane, I mean, come on. What do you like? How often do you see that?
It's true.
Yeah.
Yeah. Okay. Well, do we
Shall
want
we
to
get
jump into the stats
here? The stats? Yeah, because we haven't done stats yet. I'll take this slide.
Okay.
And I'm going to actually make the slide big because we want people to be able to see it. So this week, in the last week, had 296 properties go live on market as opposed to 429 the week before. 114 properties pending versus 122 the week before. So less listings, less pending properties, and more price decreases. We've had 163 price decreases this week versus 138 the week before. Not so many expireds, only 58 versus 82 the week before.
Okay,
Jane, do you want to take this?
Sure. The list to sale ratio this week is 38.51% compared to last week, which was at 28.44%. So we are seeing a major decrease in the list to sale ratio right now.
Yeah, that's happening.
Interesting.
Fast.
Is this correct?
No, I'm just questioning that because 28.44 sounds really low.
Go back.
No, I mean, yeah, well, we had new listings, many more new listings the week before. So that does make sense, 429 to 122. So we're lower, significantly lower in new listings, and that's what's causing that change in those two ratios.
No, it's not. It's 55%. That's wrong. These are wrong.
296 to 114. That's not 55%.
Oh, sorry.
I was 429 to 122. No.
Yeah.
I think those look right to me. As long as these numbers are correct.
Yeah.
Folks, we have one of our staff, my staff, doing these numbers, and so we can't say with certainty because we didn't do it ourselves that they are correct, but they should be correct because we follow the same process every week. And these actually, based on this, does look correct. But we'll double check just in case because we're always making sure our systems and our processes are good.
Okay, so net unconditional sales for this month so far, we're at 379. That's compared to 571 for September of 2024. And new listings were down at 1,172. That's compared to 1,441 for September last year. And total active listings were now at 3,686, and that's up over last year at 3,362. So overall, more activity, maybe a little more languishing. That's what I'm hearing when I say
the languishing. Yeah, absolutely. Price is still so price dependent on everything. So, yeah.
Okay.
Jen, do you want to take this?
We want your feedback and input. Please like us, subscribe, comment, and share.
Yeah. And if you
How was
want to
that?
ask us questions
That was great.
after, that's great. Yep.
Yes.
Perfect.
Yeah, by all means.
All right. How do people
Okay, so
get
if you
in
want to
touch
reach
with you?
me, I'm Andrew Plank with the Vibe Collective. I'm with Royal LePage. My number is 250-360-6106, and you can email me info@andrewplank.com. Find my website online at andrewplank.com or realvibe.ca. I'm looking forward to hearing from you.
Jen.
I am Jen Lowe, mortgage broker with Dominion Lending Center's Modern Mortgage Group. My cell number, 250-217-4925. Email jen@jenlowe.ca, and my website is jenlowe.ca.
All right. And you can reach me. I'm Jane Johnston with our new logo at the Briar Hill Group. You can reach me at 250-744-0775. My email is jane@briarhillgroup.com. And you can check me and Sean out at briarhillgroup.com or follow me about Lifestyle in Victoria, Instagram _Remax_Victoria. And don't forget to tune in every Thursday at 9:30. We are the Greater Victoria Real Estate Show.
Thanks,
All right.
everyone.
See you next week. Bye-bye.
Thanks, guys. Good to see you. Have a great week. Thanks,
You too.
everybody, for watching.